Welcome, learners, to another deep dive. Today, we're taking a closer look, a real magnifying glass to a company that's definitely put us on the map, Garmin Ltd, ticker GRMN. We've got quite a pile of sources here. The latest financials, analyst takes, product news, even some insider trading stuff.
Yeah, and our goal today really is to sift through all that, pull out the key bits about where Garmin stands now, who they're up against, and maybe where they're headed so you can walk away feeling you've got a good handle on them.
Exactly. We'll look at performance, financial health, the hurdles they're facing, basically what makes Garmin tick in this, well, pretty competitive market. Okay, let's get into it. So Garmin. Like I said, most people probably think GPS first. Old car units, maybe hiking gadgets. But they're a lot more complex now, aren't they? What's the core business today? The big picture.
You're absolutely right. They've really evolved. Fundamentally, they design, develop, manufacture, market, and sell a huge range of wireless devices all over the world. But the key thing now is how diversified they are. 5 main segments: fitness, outdoor, aviation, marine, and auto OEM.
OEM, right.
And that diversification is really central. It's a big part of what gives them that narrow economic moat people talk about.
Okay, a narrow economic moat. We hear that term. What does it actually do for Garmin? How does it protect them?
Well, it's basically a competitive edge, something that makes it hard for others to muscle in on their territory or copy what they do successfully. For Garmin, being in those 5 distinct areas means if, say, the marine market slows down, fitness or aviation might still be going strong. It gives them resilience.
Ah, okay. So not all eggs in one basket.
Exactly. And think about it. The skills and regulations needed for aviation tech, totally different from making a smartwatch.
Right.
It creates these defensible niches. It's not easy for a general electronics company to just jump in and compete across the board.
Right. So it's more than just having different products. It's operating in these kind of separate worlds. What else adds to that competitive advantage?
Well, another huge factor is their vertical integration.
Meaning they make their own stuff.
Yeah, they own their manufacturing plants. That gives them much better control over the whole process, supply chain, quality, maybe costs too, especially vital in something like aviation where precision is everything.
I can imagine.
That control can mean cost savings, and it definitely ensures quality. Plus, you've got strong brand recognition. People trust Garmin, especially for demanding stuff like adventure watches or marine gear.
Reliability.
Right. And finally, they just keep innovating within those specific niches. They're not just churning out generic stuff. They're pushing the envelope in high-end wearables, specialized outdoor tech, aviation, marine, gaining share because they offer really tailored, often superior solutions.
That paints a clearer picture of their strategy. Okay, let's zoom in. Recent financials. Q1 2025 just reported. Looks like a strong start based on our sources. What were the main numbers?
Yeah, it was a pretty robust quarter. Record Q1 revenue, actually, $1.54 billion.
Oh, okay.
That's up 11% from last year, and that flowed through nicely. Record operating income, too, $333 million, up 12%.
And earnings per share for the investors listening.
Right. The pro forma EPS, which kind of smooths things out, that came in at $1.61, a solid 13% jump year over year.
Impressive numbers.
Yeah.
But those 5 segments we talked about, fitness, outdoor, aviation, marine, auto OEM, did they all pull their weight equally? Or were there some standouts, maybe some laggards?
Good question. That's where you see the differences. It wasn't perfectly even. Fitness did well, up 12%. Outdoor was very strong, up 20%.
20%, nice.
And auto OEM, that business supplying car makers, really strong growth, up 31%.
Okay.
But the marine segment actually saw revenue dip by 2%.
Okay. Why was that?
Management said it was mostly about timing. Apparently, a big promotion got shifted from Q1 into Q2 this year, so they seem to think it's more of a timing blip than a, fundamental problem.
Right, makes sense. So how did this strong Q1 overall affect their outlook for the full year for 2025? Did they boost their forecasts?
They did nudge up their full-year revenue forecast slightly to about $6.85 billion.
Okay.
Mostly driven, interestingly, by expecting favorable currency exchange rates, since they sell so much outside the U.S.
The strong dollar helping, or other currencies helping.
No, favorable foreign currency impacts, yeah.
Wow.
But they also mentioned this was partly offset because they're assuming demand might soften a bit in the second half of the year.
Okay, so a bit cautious there.
Exactly. And what's really noteworthy is that even with the higher revenue forecast, they kept their pro forma EPS guidance the same, unchanged at about $7.80.
So better revenue, same profit per share forecast. Why? What's putting pressure on the profit?
Well, this connects to something else in the reports, and it's a big one: higher tariffs.
Ah, okay. That's where it gets really interesting, right? A global company like Garmin, how are they dealing with what sounds like a pretty big cost hit from tariffs?
Yeah, this is a key thing to watch. They're expecting a gross cost impact of around $100 million from tariffs this year. 2025.
100 million. That's not small change.
Definitely not. But Garmin's management sounded pretty confident they can handle it. They expect to pretty much offset that pressure.
How? What levers can they pull?
A few things. One is those favorable currency movements we just talked about. Remember, 75% of their sales are outside the US, so they have a natural hedge there.
Good.
Then there are planned mitigation strategies, things like changing their sourcing, maybe shifting some manufacturing locations, possibly some price adjustments, and just generally tightening the belt, optimizing costs.
So they're basically saying, yes, tariffs will cost us $100 million more, but we think we can make that up elsewhere through currency, supply chain tweaks, maybe price bumps, so it doesn't actually hurt the final EPS number.
That's exactly what they're aiming for. To neutralize the impact, keep that $7.80 EPS target. It really shows how sophisticated their global operations and financial management have to be.
It does. But it also sounds like there's some execution risk there, doesn't it? Juggling all those things in a tricky global trade climate.
Absolutely. There's definitely execution risk. It highlights how companies like Garmin are constantly playing this complex strategic game. It's not just about absorbing hits, it's about adapting.
Right. Turning a headwind into maybe a reason to become more efficient long term. Okay, you also mentioned some segment-specific issues earlier, like marine. Can you expand on those? What do they tell us?
Sure. So the marine segment's outlook for the whole year was adjusted down to basically flat revenue compared to last year.
Right, okay.
And that reflects ongoing softness in that market, especially in the US, they said, and maybe some customers holding back because of trade uncertainty, general economic jitters. Marine can be sensitive to that sort of thing.
Discretionary spending, bigger ticket items, maybe?
Exactly. Then there's Auto OEM. We saw this strong Q1 revenue growth, but that segment is still losing money overall.
Still in the red.
Yeah, but the loss is getting smaller. The Q1 loss was $9 million, which was better than the year before, and management seems committed. They're aiming for gross margins in the high teens to 20% range in the medium term.
So playing the long game there, investing now for future profits.
Looks like it. They see potential, even if it means some losses up front.
Okay, shifting gears a bit. Innovation seems like a constant theme for Garmin. Our sources really back that up. What are some of the standout new products that show where they're focusing their energy?
Yeah, innovation is definitely core to their strategy, that moat we talked about, and it's targeted. Look at the Vivo Active 6 smartwatch and fitness. It feels like a move to broaden their appeal, maybe bridge the gap between their hardcore running watches and everyday wellness wearables.
More mainstream appeal.
Possibly, yeah. Then in outdoor, you've got the Instinct 3 watches, the Montana handhelds. That's all about pushing ruggedness, battery life, specialized features for adventurers, really cementing their lead in that demanding space.
Makes sense. Any others that caught your eye? Showcasing their strategy.
Oh, yeah. Aviation. The G3000 Prime flight deck. That's high-end, complex avionics, high margins, hard for others to get into.
Right.
Marine, the Force Pro trolling motor, again, specialized engineering, performance focus, Auto OEM, things like the Zumo radar integrating with the Honda Goldwing infotainment shows they can work directly with manufacturers on complex systems.
So integrating deeper into vehicles.
Exactly. And they're even drilling down into niches within niches, like the Edge MTB bike computer specifically for mountain bikers. Plus, the Index Sleep Monitor smart band, that's interesting, moving more into pure health monitoring, and even a collaboration with Tolian Health on AI solutions. It's not just random new stuff. It feels like strategic moves to lock down users and find new growth pockets.
That's quite a lineup. Shows that R&D engine is humming. How does all this innovation plus their business model translate into financial strength? Are they building up a nice cash pile?
They definitely are. It all feeds into a very healthy financial picture. Just in Q1, they generated $381 million in free cash flow.
Free cash flow, the money left after running the business and investing in it.
Exactly. Crucial stuff. They ended the quarter with about $3.9 billion in cash and marketable securities on hand.
Wow, that's a big cushion.
It is. And they expect about $1.1 billion in free cash flow for the whole year. That kind of cash gives them huge flexibility for more R&D, maybe acquisitions, and definitely returning cash to shareholders. They're doing that with a recommended $3.60 annual dividend and buying back their own stock, too.
Sounds like a well-oiled machine financially.
It certainly looks that way. Very disciplined.
So with all that going for them, the innovation, the finances, the strategy, let's talk about the stock itself, GRMN.
Yeah.
For listeners maybe holding it or thinking about it, what's the market saying right now? Where's the stock trading?
Okay, the stock's been trading around, let's see, roughly $209 recently.
Okay, and what do the analysts think?
Well, looking at the consensus from our sources, the average rating is basically a hold, and the median price target from about 19 analysts is around 157.
$157, but it's trading near $209.
Yeah.
That's quite a gap.
It is a significant gap, which immediately raises the question like, why are analysts on average so much more conservative than the current market price?
Yeah. How does that analyst view compare to maybe a fair value estimate derived from the financials? Do our sources give a sense of that?
They do. The fair value estimate we're seeing is around $172.34.
Okay, so still below the current trading price, but a bit higher than the median analyst target.
Right. Both suggest that while Garmin's a strong company operationally with good prospects, a lot of that good news might already be baked into the current stock price, maybe even more than baked in.
So the market might be a bit ahead of itself according to these metrics.
That's what the numbers seem to imply. Analysts might be weighing those macroeconomic headwinds or maybe thinking future growth won't be quite as explosive, justifying a lower valuation than where it's trading now.
Okay, that's a really important piece of context.
Yeah.
What about insider activity, people running the company, or big institutions? Are they buying or selling? Any clues there?
It's a bit mixed, honestly, which kind of adds to the complexity. Institutional ownership, you see some big funds adding to their positions, which signals confidence, but others have been trimming back, so not a clear consensus there.
Okay. And insiders?
On the insider front, there have definitely been more sales than buys recently. The CEO, Clifton Pemble, sold some shares back in June, and a director, Jonathan Burrell, made some large gift transactions that usually means transferring shares maybe for estate planning, not necessarily an open market sale reflecting sentiment.
So some selling, some transferring, not exactly a stampede of insiders buying at these levels.
No, that mixed picture from both institutions and insiders suggests that even the so-called smart money isn't universally bullish or bearish right now. There are clearly differing views on the stock's value and near-term prospects.
Okay, so pulling it all together, what does this mean for you, the listener? Whether you're deep into investing or just curious about a company like Garmin, what's the bottom line here?
Well, Garmin presents this really interesting balance, doesn't it? You've got clear strength, that strong diversified business, the narrow moat, the constant innovation driving share gains in key spots like smartwatches, and a really solid financial base with lots of cash flow.
Right, the positives are definitely there.
But then you have the other side. Those macroeconomic uncertainties, the tariffs, are a big one to watch, plus some softness in specific segments like marine, maybe auto OEM profitability is still a ways off, and all this against a backdrop where the stock's valuation is currently sitting well above where analysts and fair value estimates peg it.
It really hammers home why you need to do the deep dive, doesn't it? You can't just look at the headlines or one good quarter.
Absolutely not. The big question for you to think about is, how much of Garmin's obvious operational strength and innovation is already reflected in that $209 stock price? And what does that mean for potential future returns, especially with those global uncertainties still swirling? It's a fundamentally strong company, no doubt, but valuation always matters.
A great question to leave everyone with. We really hope this deep dive into Garmin has given you a clearer, maybe more nuanced view. If you found this helpful, if you appreciate these kinds of in-depth looks, please do subscribe to the channel. And hitting that bell icon, that really helps us keep bringing you these analyses. Your support makes a difference.
Yeah, thanks for tuning in for this deep dive. We look forward to exploring more companies and topics with you very soon.